Greetings, members one and all of the Salivation Nation. We're going to take a look at an article here from Forbes online here, Forbes.com, with 5 charts that show why gold belongs in your portfolio now. Now, this is something we all pretty much really don't need this information. Most of us here, are already stacking gold in some form or another. Now, there's a lot of silver stackers in the community as well. But nonetheless, I think it's good to diversify with a little bit of gold, even if it's just a little bit at a time. And so we're going to kind of take a look at this and see what they have to say. Maybe it'll give us a little bit different perspective than what we're used to hearing in terms of why we should accumulate a little bit of gold. But also we want to understand that these precious metals sell themselves. So we want to recognize bias and analyze and question the validity of some of this stuff. Now, coming from Forbes magazine, obviously there's different opinions that come through this, and this is coming to us from Frank Holmes, Guest Speculators Contributor Group. I'm not sure who he is, but who knows? He may work for a gold precious metals firm or some sort, or maybe somebody who is tied to the industry or to the precious metal in some way. Nonetheless, it goes on to say here that in the annual In Gold We Trust report by Liechtenstein-based investment firm Incrementum is a must-read account of the gold market, and its just released chart book for the 2018 edition is no exception. And actually, we may pull that open and see what exactly that is. Chart book, Incrementum, In Gold We Trust, and it's quite fascinating indeed. And let's see what this thing here shows. Okay, there's all the different things here. So this is an online document that talks about gold, the turning of the monetary tide, and kind of goes into it with different things. We'll kind of touch on that, but let's go back to the article here, because I think this kind of narrows it down based off of the most compelling charts from this publication. The strengthening of the U.S. dollar has lately dented the price of gold, and rising interest rates are making some yield-bearing financial assets more attractive as a safe haven. But as Incrementum shows, there are many risks right now that favor owning gold in your portfolio. Below, the author has selected 5 of the most compelling charts that highlighted why gold is needed in your portfolio. The first is the end of easy money. To offset the effects of the global financial crisis a decade ago, central banks increased liquidity by slashing interest rates and buying trillions of dollars worth of government securities. Now, however, it looks as though the banks are ready to start tightening, and no one is really quite sure what the consequences will be. The Federal Reserve was the first in late 2015 to begin hiking rates, and by the way, it's only been a quarter point at a time, and it's been steadily shrinking its balance sheet for about a year now. Other banks are set to follow suit. According to Incrementum, the tide will turn sometime next year, with global financial liquidity finally set to turn negative. In the past, recessions and bear markets were preceded by central bank tightening cycles. So it might be a good idea to consider adding gold and gold stocks, which have historically done well in times of economic and financial turmoil. Central banks, here on this first chart, central banks to withdraw liquidity from financial markets for first time since crisis in billions here. Swiss National Bank, Federal Reserve, People's Bank of China, Bank of Japan, and the ECB, the European Central Bank, and the total of all of them here. And we can see where everything is in now. Under zero, withdraw liquidity from the financial markets. Fascinating indeed. Federal Reserve is now there. And then you look back in 2013, the Central European Bank was down below there. Central banks to withdraw liquidity. Next, we have banks on a gold buying spree. And I think this is important. I do agree with this one. Central banks have been net purchasers of gold since 2010, with China, Russia, Turkey, and India responsible for much of the activity. Just this week, I shared with you the news that Poland added as much as 9 metric tons to its reserves this past summer. If gold is such a barbarous relic, why are they doing this? As Incrementum writes, the increase in gold reserves should be seen as strong evidence of growing distrust in the dominance of the U.S. dollar and the global monetary system associated with it. Having a 10% weighting in gold and gold stocks could likewise help you diversify away from fiat currencies and monetary policy. And I think this is certainly fascinating, and I do agree with this, except that it doesn't necessarily mean that it's evidence of a growing distrust in the dominance of the U.S. dollar. The dollar is dominant. There's no ifs, ands, or buts about it. The dollar is clearly the best of the currencies out there, even though, as all other currencies are, the dollar still operates under fiat designation. In other words, by government decree. So it is. It just so happens it is the strongest of the currencies out there. Its dominance, I think, has nothing to do with this, or has nothing to do with the distrust, because the world knows, other nations know that the dollar is the strongest currency out there. Now, does that mean that it could fall, even though it's the best of the worst out there? Well, possibly, if we keep going into debt. But I think with some tightening of the Federal Reserve, and again, that does not mean that they're not printing money, causing inflation. It's just they're doing it less than what they were before. I think that what has occurred with the bailouts and 3 rounds of quantitative easing does threaten it more. But nonetheless, I think right now, there's really not that much distrust in the dominance of the U.S. dollar because it is dominant. But holding gold for these nations, I think, is a wise move because just like the United States, who is the largest holder of gold in its central bank, I think it's quite telling that, gold is money. And so here we see the fourth quarter of 2017, how much more these banks are accumulating gold. This is quite a telling chart here. Look at that. Look at China especially, and even Russia there. How much they've been accumulating from the fourth quarter of 2007 to 10 years later, the fourth quarter of 2017. Now, it's easy to see that these nations possibly are thinking something's going to happen with the dollar. But, nonetheless, something could. But every currency around the world is a threat because it's a fiat currency. And we're starting to do things right in this country with regards to our economic situation. But I do think we're going to feel the effects one way or another, no matter what we do, with how we respond to the economic crisis. Which leads me to number 3. Everywhere you look, debt is rising to historic highs, whether it's emerging market debt, student loan debt, or U.S. government debt. Meanwhile, higher rates are making it more expensive to service all this debt. As you can see below, interest payments will hit a record $500 billion this year. It is forecast that the federal deficit will not only reach but exceed $1 trillion in 2019. How will this end? Earlier this year, the author called the risk of global ticket debt bomb, and I believe it's one of the most compelling reasons to maintain some exposure to gold. And we won't explore that, but nonetheless, there's only so much we can take with adding this much to debt. The U.S. government's debt outstanding continues to rise rapidly. Interest expenditures, total public debt, it's just crazy. Sooner or later, it's going to catch up to us if we don't act soon. When that will be is anybody's guess. I thought, for many different reasons, probably naively, it would happen around 2013 and 2014, but it didn't. In other words, we could have quite a ways to go before this comes back to bite us. But doesn't mean it's an excuse to kick the can down the road, that's for sure. Number 4, an exceptional store of value. Amen. I think this is going to be important. The US dollar denominated terms, the price of gold is down right now. But in Turkey, Venezuela, Argentina, and other countries whose currencies have weakened substantially in recent months, the precious metal is soaring. This alone should be reason enough to have part of your wealth stored in gold. Need further proof? According to a recent Bloomberg article, the cost of a black market passport in Venezuela right now is around $2,000. That's more than 125,000 bolivars, 68 times the monthly minimum wage. And I know that could just be a certain set of time. Who knows what it is now. The Venezuelan family that had prudence to own gold would be in a much better position today to survive and escape the President Nicolas Maduro's corrupt regime. In extraordinary circumstances such as this, yellow metal can literally help save your life. But the problem is unstable government too, and being able to actually liquidate it might be a different matter. But nonetheless, we can see here, gold does exactly what it's supposed to do, protect purchasing power. Amen to that. That's what it's supposed to do. And it does it in all times, markets, except for, very few times when they may correlate differently depending on inflation with certain products in a thriving economy such as now. A sterling time to buy gold is the 5th. Finally, word about timing. According to Incrementum, some of the best gold buying opportunities have been when gold and silver ratio crossed above 80. That is, when it took 80 more ounces of silver to buy 1 ounce of gold. If you look at the chart below, you'll see that such instances occurred in 2003, 09, late 2015, and early 2016. All ideal times to accumulate. We see this similar buying opportunity today with the gold-silver ratio at a high of 83 as of October 8th. What's more, gold stocks are the cheapest when they've been in more than 20 years relative to the S&P 500 index. So they're saying the highs in the gold-silver ratio were a great opportunity for gold, not silver. That's interesting. And I'm not sure I see the correlation there. It is obviously quite a wide gap here. And I'm not sure why they wouldn't want you to buy silver. They don't really say there. And but anyways, that's interesting. My feeling is that this ratio, now silver is an industrial, it has much more wide use in the biomedical field, technology, and industry. So it's more of a commodity. But nonetheless, I would suspect and suggest that people buy some silver too. Definitely diversify, for sure. Gold is seen more as a store of wealth, probably even more so than silver, because of silver's stronger use as a commodity. But nonetheless, gold does have some industrial uses as well, but its price movement is a little bit more stable than gold. Nonetheless, gold or silver, and really, we can't go wrong accumulating both, in my opinion. And so these 5 charts, some of it we already knew, others of it may have been a little bit more enlightening or dug further deep into what we understand about gold and silver, especially gold. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.